Victor, are you muted?
Hey, good morning, everyone. It is Friday morning and it is January 16th, and the market has not yet opened. And we are heading toward an open. It looks like it's going to be a positive one. It's been a really interesting week with a lot of companies announcing this week. We had the earnings season begin. We had a lot of big banks announce, TSMC announced, and a couple of other businesses. And we are going to look at a few companies we had in mind, starting with Rocket. Then we're going to look at Dave, NXT, SCCO. We're going to look at fundamentals and the technical setups. I am joined by Daryl. How you doing this morning, Daryl?
I'm doing wonderful, Victor. It's good to be here. Hello, everyone.
It is good to be streaming again. It's been a couple weeks since we last streamed, but we are back. So far for earnings, any observations you've made? Anything you've seen that's interesting?
Well, I was watching the banks pretty closely this week. Citi is my favorite. And they had a little downturn earlier in the week with the 10% credit card cap that Trump talked about, tweeted about last Friday. And then it was, discussed in socials over the weekend. Most of the banks and credit related companies did take a hit, whether they were directly impacted or not. Citi, however, fully recovered after that announcement and their earnings. They fully recovered back to their price. I think they were the only bank of the large banks to do that. So
I
I was
noticed that.
really pleased with the price action on Citi, and I have
Yeah,
high hopes for them this year.
I think they're going to do well. And the I did notice that on Wednesday the stock, along with a lot of other banks, sold off, and Citi made a really good comeback yesterday. Speaking of that topic, as it seems like the leaders, politicians are going to be kind of put pressure on credit card interest rates to try to, I guess, make voters happy. Um, it it makes me think about the buy now pay later companies because they don't charge an interest rate. For
Right.
them, it's kind of you're familiar with the term factoring. When a company factors their accounts receivable,
No, I'm not.
what you're basically doing is a company might have, let's say, $10 million of accounts receivable. Customers owe
Okay.
them
All right.
$10 million.
Okay.
And another company that is willing to factor those accounts receivable will look at the receivables and say, we'll give you 95 cents on a dollar.
Oh, okay. All right. That makes
And
sense.
the company that owns the accounts receivable is like, hey, we need that cash because we want to expand our operations. We need the cash to make payroll, whatever it be. They're like, we'll do that. And that's called factoring. It's been around for a while, for like
I didn't know
100
the
years.
technical term for it, but I was familiar with what you're talking about. PayPal did that earlier last year.
So this is what, like, the buy now pay later programs, this is what they do is they basically are saying that consumer wants to buy that new iPhone, and that's a bad example because you usually get on a plan. So let's talk about a TV. They want to buy that beautiful big TV for $2,000 so they can watch the NFL playoffs and then eventually the Super Bowl. It's a $2,000 TV, and the buy now pay later companies will, they already have a prearrangement with the retailer, let's say Best Buy, and Best Buy says, "Yeah, we'll give you 3% of the purchase price, and we get the balance pretty much immediate, like a credit card."
Okay.
And the buy now pay later companies will earn that 3%, but the consumer has to pay it over 6 weeks, 3 payments,
Right.
6 weeks. Well, that's a very good rate of profit if they don't have excessive write-offs. but it's not an interest rate. It's a different form of adding liquidity, I guess, to the retail market. So it'll be interesting to see those. And when I hear about credit cards getting pushed back, I think it's going to help the buy now, pay later companies. Okay, so for the past week, I want to take a look at the heat map. And for the past week, it looks like the semiconductor space has done really well. TSMC had very good earnings. You see that the industry that supports semiconductor production is doing great. TSMC announced, hey, they're still going to keep growing, like at very good growth rates, like 30%, which is really impressive because they're a big company. So that's looking really good. Look at the space over here. Industrials had a great week. Consumer staples, good week. Very good week. Energy had a good week. Utilities, real estate, materials had a very good week. Silver, the price of silver is really going up. Home Depot, Lowe's, I think that has a little bit of correlation with Rocket that we're going to see in a little bit. And then J&J had a really good week. So that's what's going on this past week. We usually lead off earnings with financials, but for the past week, I should note, JP Morgan is down, Wells Fargo's down, Citi's down, Visa's down. Well, for sure, Visa's down with the news that, hey, the politicians are beginning to put downward pressure on those interest rates. And Capital One most definitely is down. They should be down because it'll really affect them. Meta
Now, why do you think Visa and MasterCard went down when they don't actually hold the credit? They just do the transactions. You think that was a market overreaction, or do you expect that they will have fewer transactions?
The latter.
Okay.
You're right that it doesn't affect them, but maybe if they can't charge the higher interest rates, maybe fewer companies are willing to issue out credit cards.
That's the thing right there.
And they're like, well, there's going to be fewer credit cards out there, meaning less volume.
Right.
All right. So that's the heat map. We talked about the earnings. Looks like we've got Mike on. And good to see you, Mike. And we got Peyton on. Good morning. So let's get into Rocket. Rocket companies, Rocket Mortgage, $66 billion market cap company, revenues of $6 billion. They pay a nice dividend at 3.4%. And with lower interest rates, that's going to create a lot of refinancing activity. Of course, there'll also be like new home purchases and that kind of thing. But new home purchases are somewhat limited with these really high real estate prices. There's just not a lot of affordable housing nationwide. But those that own a house would gladly refinance and go to Rocket and say, hey, I pay 7% on my home loan. I'd love to get into a 6 or a 5% home loan. Great. And Rocket will earn certain fees on that refinancing. And that's where the revenues come from.
Let me jump in on the dividend. They don't actually pay regular dividends. They pay specials every once in a while. So in 2021, they paid one. 2022, they skipped 23, 24. And last year, they paid a special dividend. So if you're looking for dividends, this is not a regular payer. So keep that in mind and factor that into any decisions you make on Rocket.
Yeah, and I agree with John. I think Jan's comments in line with what we were saying around credit card and fees.
Yep, I agree. Sounds right on.
Okay, so for the 1 year, this stock has just been flourishing. So I guess the news that we were going to have a low interest rate environment caused the stock to really jump up. And over the 5 year, you see where interest rates affected this company. Back here, we had very high interest rates, so it began to put a lot of pressure on. People didn't want to refinance, so it caused a lot of headwinds for the company. And I think they were smart. They acquired some businesses. I know they acquired Cooper companies because one of my investment properties is financed by Cooper, and we now pay that mortgage payment to Rocket. And now the stock is really heading higher, which is very good. The growth of the company is very good, 41% growth. There is some more organic growth combined with some acquisitive growth as well. A couple years ago, they were contracting. And one thing that I thought was, and I still haven't figured it out, is they don't have free cash flow, at least no consistent free cash flow, but they do make money. So I'm
Do
gonna
you
have to
think
figure
that
out.
was related to their acquisitions?
No, because the acquisition would be done through debt or stock, right? And that doesn't go into the cash flow statement.
Okay.
So I'm gonna dig into the cash flow statement with the group here in a little bit. Um, let's go high level. I'll let you handle the charts, and then I'll kind of dig into the financials and kind of go through it. Analysts think it's gotten a little expensive. That's understandable. The stock's up more than 100% over 1 year. And this is the year we're in, FY 2026. They're going to really grow this year. Whoa, 71%. Very good. It's going to pop up their profitability, but it's not going to break any records, just 80 cents a share. It is growing substantially, but it's growing from a very low number. It's going to bring down their PE ratio to 29. And from there, the best, these analysts can do is say, well, they could probably follow it up with about an 11% growth year in next year's full year, 2027. So this year's a boom year. Is this thing fully priced? Is it pretty much pricing everything we know about, the good news with low interest rates, or is there more to go on this rise? Let me kick it over to Daryl. He could show us the charts and show us what he is seeing in Rocket companies.
Yeah, so this one I got back in 2020, I think. Let me go back just a little bit more. Oop, I need to go back more, not less. Yeah, they IPO'd in 2020. I don't remember when I first picked them up, but I actually took a fairly big loss on these. And then in 2022 and 2023, when I did a Roth conversion, because I had some tax brackets to fill up, I transferred these at a loss over to my Roth, but that became my new cost basis, which was good for the Roth conversion. So I transferred them probably at a $16 cost, but I was only charged taxes on these prices. So that worked out really well there. And now it's, back up. I think I'm up 77% on this one. And I've sold off some shares when we got back up over here. So this is an interesting company. They probably have one of the most efficient loan processing systems around. And then they've done their acquisitions. I think they've set themselves up really well. But the thing that's really driving them right now is the fact that lower interest rates are, coming in. So just one thing on the chart I want to point out on the 5th. So we're talking 2 weeks ago. There was a cup with handle that formed, got us a price target of 25, which we are almost there. We're at 23.27 at the moment. So if this cup with handle pattern fulfills, it actually triggered on the 5th. So it wasn't complete until we got this trigger. But since we triggered, we are up 15% above that rim, and we still at least have $2 a share to go. Then what happened this week was the mortgage applications shot up to 28% increase. And if I just put a crosshair across here, that's the third largest surge in mortgage applications we've had in 5 years. So this was basically, let me close this here. This is a pretty large jump. We did have a jump that was over 30% at the beginning of January. And this higher than normal mortgage applications compared to 22, 23, and 24. I think this average is higher. That is what's driving the price of Rocket right now. So President Trump mentioned that he was going to, I don't know whether he ordered them or asked them, Fannie Mae and Freddie Mac, to buy $200 billion in mortgage-backed securities. So if you have buyer coming in, the yield comes down, and that helps drive down mortgage rates. And the applications, surged, and refinances also rose. So Rocket benefits from both mortgage applications and anybody looking to refinance. So let's go look at the 30-year mortgage rate. And this is over 50 years. So we had come down, we were at 16% mortgages in 1980s. So that looks, what we have today looks like a walk in the park compared to that. I think I bought my first place in 1985, so I was looking at 13%. I bought my second one here at 8%, and it's been coming down generally since that particular time. We got as low as, less than 2% at one point in 2020. So it didn't take long for people to get really used to 3 and 4% mortgages, even though for 50 years we had never seen anything like that. But we got used to it really fast. So now, even below average mortgage rates, which we have right now over 50 years, they still seem really, really high because we locked onto these interest rates down here. So anyway, we do see a pretty sharp decrease over the last 6 weeks or so, and that really accelerated this past week. We went from 6.16 or so down to 6.06, so 0.1% over a week period. So we're coming back down to what I would say is a 5-year average. This is 260 weeks, this red line. 52 weeks in a year times 5 is 260. So this is the 5-year average, be 5.66 or so. And we're just barely sitting above that. And it looks like the 52 weeks, so the 1-year average is definitely declining. So let's look at that in relation to the 10-year. 30-year mortgage rates are typically set off of the 10-year Treasury rate. We can see the 10-year minus the Fed funds rate. We finally have a spread just barely above zero. As recently as 2009, we were like 3.5 points above that. We were 2.25 points above that. We went below during the low interest rate environment, and now we're creeping back above. So the spread between the 10-year and the Fed rate is pretty much zero right now. And then if we look at the 30-year mortgage rate minus the 10-year, this is the lowest we've seen. We were sitting at like 300 basis points above the 10-year. And right now we're below 200. So it's decreased a full percentage over the 10-year rate, which is good for mortgages. That'll increase the number of mortgages refinancing, which I believe is going to help Rocket and any kind of company related to mortgage finance. So anyway, that's my spiel on that.
Excellent work. Now, this one's a tough one to look at fundamentals. Let me show you why. So you have a business that is boom or bust, right? We're either going to grow at 200% or we're going to contract at 54. This is like separated by 2 years. And so now we're back in a boom. Well, is that going to last forever? No. It's like, man. So it's harder to forecast those types of businesses versus one that's growing consistently 20% or so. Having said that, analysts think it's a little expensive, and it's not producing free cash flow yet. So what I did is I took a 6-year average just to get a decent number to work with. Analysts think that it is going to grow substantially this year, and then it's going to slow down in 2027. The profits are going to continue to expand. That makes a lot of sense. And, one thing I would say about this expectation is I think the President Trump is he's not going to like in a year say, oh, okay, that's enough on rates. I think he's going to push for lower rates for the next 3 years. So I would expect rates are just going to be lower and lower and lower. Back in 2020, I think rates were down to like 2.5%. It was really, really ridiculous. It was really an opportunity to refinance. And, we're not near that. I think we got a lot of ways to go. So I think this could be better than what's being put up here by these 12 analysts. All right. So let's take a look at my valuation. I just finished it. And here's Rocket. It doesn't look good. Now, it's just completely like out in left field. Well, I would say not so much because you have a stock that's up 111% in 1 year. Okay, so it's just a hard one to figure out fundamentally because I don't expect that they're going to be. I just showed you their financials from year over year over year. It's going to be boom or bust, boom or bust, boom or bust. On average, this is their free cash flow over the last 6 years. There's some positive years, some negative years. I think the next couple of years are going to be positive. So that should be really good, but it could be followed by some negative numbers. So it's a stock that we can't really look at fundamentals and have a high level of confidence on. And at the same time, the stock market may have gotten a little too enthusiastic, like, oh man, interest rates are going down. Let's buy Rocket. And the stock's up 111%. Understood. Now there is a question I wanted to answer as to why is Rocket not able to generate some free cash flow? I mean, what gives? I like free cash flow. So here's their balance sheet. This is their revenue. They make money on creating loans. So that's what we're seeing here. And we're seeing that here for the first 9 months of 2025. They'll be reporting their full year at some point. And how's their share count? So
They report at the end of February.
Okay. So the share count really did change, right? So it really went up. Okay. So I want to look at the statement of cash flow and try to understand, why are you not producing free cash flow? Okay, we start off with how much money you made or lost, and for the first 9 months of 2025, they lost a little bit of money. Now this is a negative number here. Origination of MSRs. What are those? I don't know what they are. And I don't know what this is, but these are affecting the cash. Disbursements of mortgage loans held, proceeds from sale. Okay, so these numbers here, when Rocket originates a loan, they will be the very first company that's going to fund that loan, and then they sell off that debt. So they lend out to a person that's buying a home in Kansas City, and they borrow $500,000, and Rocket will provide that $500,000, and that's what this negative number is about. And then they take that loan and they say, hey, some financial institution that wants really low risk yield will buy that loan, and then that will be owned by somebody else, and they get that capital back. So that's what they're doing there. Since they are growing, I would expect that this number is higher, because they have far more people that are just took on a loan. So Rocket had to put the capital up to fund those loans. So this makes sense to me. It was kind of not making sense. Why are they not producing cash flow? But in a growth cycle, that's what's going on. Okay. It answered my question. I am good with it now. I like to make sense of financials. Having looked at that, I'm like, well, it's probably going to get a lot better. So I'm going to go ahead and increase that. I'm still underwater. I'm still probably with the analyst. The analyst said it's too expensive, and I'm with them. The analyst said it was expensive by how much? 12%. I think it's too expensive by 13%. So that's Rocket Companies. It's done great, but that's rear view mirror stuff. Like, hey, the stock's really been bid up. Is it going to continue to go higher? Maybe. But fundamentally, it's a tough one to figure out. So that is Rocket Companies. I just created this. So for you advanced and super and platinum investor members, this is already appearing in your terminal, whether it be the super investor terminal or the advanced investor terminal. If you go there, I set these things up so that you can, as I create new research and valuations, I don't know if this one's updated yet. Maybe the super investor one has. And they will appear here, and you'll be able to look at the research that I'm doing. Looks like it hasn't updated yet.
They did gap up today too, and 2.6% at the open.
There we go. I just needed to refresh my screen. So as I create research, those members that are advanced, super, platinum, the research is going to come over almost real time, right? You just got to refresh your screen. I learned, and it gets updated. So check it out. Keep using the tool. Hopefully it's useful to you, and you'll have access to all this research that I'm compiling year after year, live stream after live stream. So that is Rocket Companies. The stock market has opened. What's going on out there? So we've got the NASDAQ up 0.53, the Russell. So I was drinking my coffee this morning, I think I was watching Bloomberg, and they were talking that small caps have really done well this year. Just to lead to get the year started. And yeah, 7.76. That is outperforming the S&P. So here's the Russell versus the S&P. Big outperformance so far. We're 2 weeks into the year, so let's not make too much out of it. But it was being stated that the Russell, a lot of the earnings growth is there, revenue growth is there. So left me with the impression that, maybe I should look at my small caps and maybe buy a few more shares. Let's take a look at the heat map, see what's coming out of the gate. Here we are, semiconductor, red hot again. Man, when is this going to slow down? Amazing. What are your thoughts on semiconductor? When do you think it'll slow down?
I really do not know. It's been crazy.
Amazing. Just totally amazing. And, but it will slow down someday. I just don't know if it's tomorrow, next year, in 5 years, and we will find out. All right. So nothing else really big. Software continues to be under a little bit of pressure. Materials are down. Utilities. Healthcare is down. And some financials are up a little bit. So that looks good. All right. So looks like Tomas is on. How you doing, Tomas? Good to see you. Good morning. All right. I want to look at some stocks, and I'm going to start with NXT. This is Next Power. This came up on a live stream, I'm going to say in the last month. And it's up a lot. Now, these guys provide solar tracker technologies and solutions for utility scale and distributed generation solar applications in the US and internationally. The company offers tracking solutions, including NX Horizon, a solar tracking solution, NX Horizon XTR, a terrain following tracker to expand the addressable market for trackers on sites with sloped, uneven, and challenging terrain. All right, looks good. And to look at their website, man, look at that. Look at that array, huh? That'll charge up your iPhone. That is a huge, huge power generation area. Speaking of solar power, I really enjoyed the movie Martian, and I read the book as well. And if you recall, and did you watch the movie?
I did.
And he had to get to a different part of that planet to get rescued. And pretty much he would travel in his space mobile, whatever they called that Jeep he was in. And then in the daytime, he would charge up the batteries by putting out his solar panels. And then at night he would travel as far as he could. And that was pretty interesting. That's kind of what we're talking about here is, trying to put these panels down and having devices that are going to be pivoting these panels to grab the right sunlight. Right now I have fixed panels on my roof, no mechanics up there. It's just fixed. But this is a really good idea. And I think this is going to keep getting better. Maybe at some point they'll have residential solutions, but for commercial installations, I'm sure they want to grab that power. If they're going to install these types of arrays with what looks to be, this is like easily over 1,000 panels, maybe 10,000 panels put together. That is grabbing some big power. So anyway, this stock is on my watch list and I'm thinking of getting into it. So that's why I'm focused on it. It is a small cap, 14.5 billion, revenue of 3.37. Forward PE isn't too crazy, 23.4. It is fairly priced, a little too high. When we look at the growth of the company, 20% growth on a $3.3 billion revenue number, that is not overly exciting, but it is good. Now, what is exciting is I went to the quarterly, right? I'm trying to figure out what's going to happen in the next 2 years. I know for sure what happened the last 2 years, but the last 2 years is a good reference point. The best forecast / information that I can invest on is the future 2 years. And this looks really good, 42%. That looks like a very good growth number. The company is going to announce on the 27th. So we are less than 2 weeks away from them announcing their earnings. So the growth looks good. It's beginning to get exciting. I'm glad to see that it's accelerating its growth. The other thing I like we looked at Rocket and we had free cash flow, negative, positive, negative, positive. It's like, what's going to happen next? And when I look at a financial statement like this, it's like, hey, this makes a lot of sense. It's a company that is newer with a newer technology. It got its business operating to a certain scale, and then started to kick out cash. It's getting higher, and this is the trailing 12 months. So this looks good to me. Gross margins, they are physically providing a product, so the margins aren't as good as a software company or a biotech company. 33.2. Another good thing, it's growing, it's expanding its gross margins. It's very good with scale, its ability to get better. You could see the improvement. I like that as well. Has good profit margin. So if you look at 17 and you add that 42, it's a very good business. Very good top line growth, very good profit line growth or profit. So that looks good. Forecast. How many analysts are covering it? 19. Very good. So that's a good, healthy number of analysts that are keeping an eye on Next Power. And we are operating in this year here, but we're almost there. March 31st, less than 3 months away. We know what's going on here. They grew at 17%. For the year that's coming, and I don't quite agree with this number. I just showed a quarter that was growing at 42%. So here's the 42% quarter. We got this quarter is supposed to grow at 20%. Then they're going to contract. A lot of analysts are covering them. So why would they be contracting? Beginning of the year, the government's not supporting solar programs a whole lot anymore. Okay, so this is concerning. There's a lot of goodness in this, the fundamentals, but this is a problem. If they're not going to grow quickly, then I'm concerned about it. So this slower growth, 11.5%, 13% growth. it's decent growth, but not exciting. And it's not the biggest business in the world. It's $3.88 billion is their projected revenue in fiscal year 2027, which begins on April 1st, 2026. Forward P of 21, 18, 16. So this one here is it's got really good bones to it, but they got to keep growing. They can figure out how to grow. They're going to do really well. And you can see that the market is looking at that revenue growth probably, and the market's also concerned. When we look at Dave, we're going to see the same kind of situation, a little different, but the same. But I am so glad I'm streaming with Daryl, because I look at charts and kind of see a simple kind of observation. And I'd like him to take a look at it and give us a little more expertise around the charts.
Okay, so they started on a trend higher on the 9th of September, went up to a high in the past year. I didn't look at it too much further back than that. So that's basically an all-time high at 112. And then we kind of went into a phase where we contracted and leveled off once more. And it looks like we're starting to break out into another trend, which I suspect is going to be higher, back to challenge this 112. I'm basing that despite the prices going sideways for 6 weeks. We did maintain an RSI above 40, and the RSI just continually is creeping higher. We did get over 60. We pulled back and we're right at 60 again. I think the bias is to the upside, challenge that 112. We have a support line at around 84 that we saw from about October the 10th. It's been tested 1, 2, 3, 4, 5, about 5 times. So I think you have really good support at 84. Looks like we're sitting maybe slightly higher than the midpoint between support, resistance and support. But I think they're going up higher than here. We do have a PPO that really crossed over. Well, I'm going to go back further than that. Let me step in just a little bit. Yeah, I would say about right here. So we did get a bullish signal. We were right at the midline, but you can see that the histograms are staying pretty consistent. So the 12 difference between the 12 and the 26-day average over the 9-day average is growing at the moment. So that is good as well. I'm going to go back to just a year so we can see this accumulation. You can see that it came up, pretty much held steady for a while, but accumulation has been strong, and we are very near a 52-week high. We're down just slightly. Money flow is currently negative. If this was one that I was following, I would enter here. Even today, they are up just a little bit over today. I'd keep a tight stop loss on it, but I think this one could easily be ridden to 112, and if it breaks above 112, we'll just have to keep an eye on the RSI and the PPO and see where it goes from there. Let's look at a weekly view. It's actually in a sell signal configuration. But notice that the black line is starting to turn up and will match up with the red line here in a week or two. So this tells me that it's setting up pretty nicely. We did get overbought. We came down to the 60 line in the weekly view, and now we're starting to press back higher. So I see 112 coming up really quickly.
Excellent. Thanks for doing that. And, just kind of holistically, or I should say, big picture, we need more power. And these guys are in the power generation complex. So I like that theme about it. And this is real, right? I can personally attest that these solar panels, they took my electricity bill and wiped it out. Like I paid for the panels, but my calculations, I'm saving $150 to $200 a month. I mean, it's a money saving opportunity. So having said that, I am gonna enter into NXT. Let me show you my valuation. When I look at NXT, here's the valuation I have on them. I would say it's conservative. Growth rate in line with their plan on growing. Now, I think they're going to do better than that because of what I just said, which is we need power. It's not like, oh, we needed power in 2025, but we don't need it anymore. No, the amount of power we need in 2026 is even higher, and it's probably going to be higher in 27 and 28 and so forth. So as NXT creates these products that help utilities and data centers grab more of that sunlight, store it in batteries, and then they can use it along with stuff they're buying off the grid, that'd be a great idea. So, and especially consider this. One of the things that I think about is solar panels will produce power in the daytime and obviously no power generation at night. Now, in the daytime, people wake up, they run their air conditioners, they use power at their homes, offices, people go into the office, power gets used in the daytime. So the load on the utilities in the daytime, that's when the load is highest. That's where solar panels come into the picture. So I think they're just going to continue to be a very good component to the overall electricity demand. So I took their free cash flow as they're producing it today, growing it by 10%. And that cash flow really adds up. It's discounted by 84%. That's a very good business. And I don't see a disruption to it. We're now seeing that they continue to grow, although modestly, even without the government incentives. And these guys are more commercial, right? They're more for utility scale installations as opposed to homeowners like myself. When we go to earnings per share, it's not discounted. It's actually, priced at a premium. But overall, this is a nice long-term stock and it's moving up today. So I think it's going to be a good buy. That's one of my short list of buy stocks. What's interesting about this company, I don't quite agree with where it's classified. Solar companies are put into the technology sector under solar. I think she'd be classified under either industrial because they should be classified with turbines and power generation equipment. That's where they should be, or utilities. But I think industrials would be a better place for it. But that'll just be my little side note on Next Power. All right. Thanks for doing that, Daryl.
You're
welcome. Looks like we've got a good number of people on the chat. And Peyton's been trimming back on simmies, trying not to get caught off sides on that investment idea. But I'm glad you're in simmies, by the way. Best days. Good to see you. We looked at Intuit extensively last night on the stream. Let's look at it again. Intuit, along with software companies, has been just getting sold off, and it's discounted by 33%. It's growing nicely. It's got terrific cash. It's profitable. It's discounted both by earnings per share and by its cash generation. And I'm an owner of Intuit. But if we look at the space that it belongs to, and if you wouldn't mind, Daryl, if you can look at the charts on Intuit, software companies have just been sold off. They are taken out with last week's garbage. Just put them in the dumpster. They are not desirable by the market. I don't agree with that. I think these software companies will be very valuable, are very valuable. I don't think AI is going to disrupt them the way that the market is believing is going to disrupt them. But the market's going to do what it's going to do. It continues to sell off these software stocks. Now I'm kind of putting the brakes on buying for now. I'm just buying one of them, Okta. But I'd like to see what Daryl has to say on the charts for Intuit. And FYI, Daryl, we just had a little earthquake here in California.
Oh, wow.
So if you saw my eyes widen, everybody, we just had a tremble, a little movement in the earth here in California, Southern California.
Okay, so this looks a little painful. So Intuit was really consolidating since the beginning of August. It looks like about right here, we were trying to get some price discovery. And then it started on a downward trend. I think my intuition is telling me this is going lower. We did have a sell signal in the daily time frame. We're seeing the money flow increase pretty significantly. We are down to about the lowest we've had in accumulation since the end of May. We have a 21 decreasing, a 5-day decreasing, a 50-day decreasing. I think the trend is lower. So let's go back out a few years. Now it looks like it might be at pretty good support. Let me add an auto support resistance line. Trying to figure out where this should go. I'm going to put it there for the time being. They are somewhat trading at that right now. If they break, let me save this. I know we've looked at this before, but I must not have saved the chart. Okay, and then, yeah, if they break down below this, and it looks like they're trying to today, then I'm looking at least probably another 10%. So let's go into back to the 1 year. Yeah. If they don't hold this, today's Friday. So if they close down below this line by the end of today, if it continues to go downward, I don't see a lower wick on this candle. So it tells me it's trading at the low of the day. Let's go see what the trend looks like in the By the way, this company is doing really well with the mortgage environment as well. This is a brand new IPO, but it's doing crazy things right now. Intuit, INTU. We'll look at them in the daily chart. So this is a 15-minute view. We can see that the 5 period and the 13 period trend charts or trend lines, that's this blue line and this green line. They are going down, still heading down. They've been heading down for, let me go back just a little bit. Oh, yeah, just been going down for days. Let's go to like a 60-minute chart. We can see that the 5 period and the 13 period are still decreasing with no indication that things are slowing down. We've had an RSI on this time frame in sell territory or an oversold territory. This PPO is not trying to recover. So this, I don't know, this one doesn't look good.
So
if it breaks down below here, I think we have another 10% at least.
ouch. So let's talk about this for a minute. So maybe down the road, 6 months from now or whenever, 6 days, 6 months, 6 years, I think we could all agree Intuit is a viable business. It sells stuff, sells software, provides services like in TurboTax. People want. I mean, we got tax season pretty much starting now, and people will be using TurboTax. Having said that, what are we looking for as a setup that would tell us, okay, the more longer term rally has been established in Intuit?
Here we're looking at weekly data over 3 years. We got a sell signal on this one back on the 26th of July
Of 2025.
of 2025. So we've been on a sell signal.
Mhm.
They're breaking down below 40 RSI right now. This is a 21 week moving average now. So you're looking at 6 months. That is turning down.
Hmm.
So if I own, well, I'm not going to say that. I don't own this one. I have really no interest in it. But I would if I owned it, I would reduce my position size and go find something else to invest in for the next 6 to 7 months.
Well, I own this stock, and the stock market has done me the favor, and it's reduced my position size for me by reducing the price.
Yeah.
If you know what I mean,
Yep.
which is not my favorite method of reducing my position size. This is a space software that, you know, I'm in the software business. That's what I do. So my level of expertise here, knowledge or competence is pretty high. I've used software I've used TurboTax for 30 plus years. QuickBooks is a simple app for businesses to do their accounting and other business needs. I've done large scale ERP projects. I've done large scale CRM, big analytics projects. I work with AI. I do big database workload installations and so forth. So it's an area that I know, and it's amazing that the market is writing off the software space with the expectation that AI is going to, I mean, when I hear the pundits or the talking heads say, oh yeah, you know, Claude. Companies can go develop their own code on Claude. I'm like, that is so like overly simplified. You're not going to put a piece of software out that could get hacked, create mistakes. Maybe you overpay your employees because getting that money back could be very painful for everybody. There's just so many problems, so many hazards. And AI could do some benefit to the overall space, but it's not going to disrupt it. It's the same feeling I had about Google a year ago, but so far the market doesn't care. The market keeps selling off Intuit, CRM, ServiceNow, Adobe, Zeta. I mean, we're going to go down the list and it's like, oh, everything's getting punished. Wix is hammered. So I'm going to take a step back. I've stopped buying more shares because I don't want to dig the hole any deeper for now. And I'm waiting for this thing to set up and show that, okay, we're on the rise with these stocks, and then I'm going to buy more. Thanks for looking at that, Daryl.
No problem.
So if you guys are like me, you're beginning to think about taxes, not my favorite thing to do, but I like to do them early. I think I'm going to get some money back this year because I think they had the tax tables overly conservative, I guess, and people should be getting a big return. So I want my money back as soon as possible, so to speak. And these guys should be able to use AI. Like if you use TurboTax, it's very wizard driven. It just asks you questions. And I was educated in accounting. I took tax classes in college, always done my taxes. And it's a very good piece of software, and it's all online. It's all done through, you don't load any software on your computer. You just log into their portal and you get your taxes done, and they offer a bunch of services through there. So I'm fairly confident that Intuit's just going to keep growing, and it's going to be a more valuable business in the future. And at some point, the market's going to realize that and say, "Oh, I guess AI is not going to kill these guys." And it's worth buying. But for now, I'm going to pump the brakes. I'm not buying any more shares. I'm just going to buy some more shares of Okta. We'll see where Okta is trading. All right. Thank you, sir. Nice work on that. Somebody asked about First Solar. I think it was Scott. And since it relates to Next Power, I opened it up. First Solar. Why are solar stocks going up today? Okay. Both solar stocks are going up. This one's 26 billion. First Solar, I do have a piece of their equipment installed here in my home. It's actually the, what do they call it? So each panel has its inverter. And then this is kind of like the brains behind all the solar array is by First Solar. I log in online and I can see how my solar panels are producing power. So that's my knowledge of these guys. So that's what they do. Here's their business. All right. So these guys here, their stock's been doing well. That's another thing, like they lost their subsidies, and most definitely the market was selling these guys off earlier this year and sold them off going into last year's election. And then they got sold off again, and they're picking themselves back up. Very good. Over the 1 year, 32% rate of appreciation. That looks really good. So that looks good. Forward P is really low. Financials. Growing at 31%. That looks good. Look at this quarter, 79%. Hey, what's going on here? Everybody's buying solar. Gross margins of 40%, net profit of 27. This looks really good. All right. And I don't know that I have a valuation on First Solar. Let me take a look. There we go. So First Solar, it's a little dated. I'd like to update it. So first, I'm gonna update this guy. Let me look at it. Would you mind taking a look at First Solar on the charts?
Sure.
I'm going to finish off by looking at the forecast. It gives you about a minute to get it set up. Okay, so we just got done with 2025, moving into 2026. 20%, 20.6% growth, 14, and then 3. Okay. I'm more optimistic than this 3% growth rate, by the way, because why would people stop installing solar panels? Energy prices are going up. Like we have friends and family in other places of the country, and it just seems like a lot of people are installing solar because it's an economic, decision. It's not a, hey, I'm trying to save the planet kind of, decision. It's, hey, like we have some close friends in Las Vegas. They moved from Southern California to Vegas. They're paying $600 a month for electricity to run their air conditioner. They're like, enough of that. They put on solar panels in Vegas, and that's saving them a lot of money. That situation exists, throughout the country where people are paying a lot in the summer for their air conditioning. You put those solar panels on, it saves you a lot of money. So that looks good. I'm liking what I'm seeing with First Solar. Forward P, look at this PE ratio. Really low. And looking at their profile, Technology Solar. These guys are headquartered in Tempe. That's the right place to locate a solar company, by the way. In Arizona, they know the sun. Nice and hot out there. And I'm sure a lot of people in Arizona are installing solar panels. All right, let me kick it over to Daryl, and I'm going to update my valuation on First Solar. And then we'll see if it looks better than Next Power. It's all yours, sir.
Okay, so they've been testing resistance at about 285, 2 or 3 times intraday on some days. And then we have support down at around 244. They reached that on the 15th of October, pulled back, tested it again, broke out above it, and then tested it from the upper side. And that's where they're trading right now. So they've been trading there for probably 8 to 10 days here, it looks like, right at that support line. The RSI is above 40 at the moment. It's not very good strength. We do have a sell signal on the PPO, but the black line is starting to level off and actually increase a bit. I can see right here. Let me turn on my cursor highlighter so you guys can see where I'm pointing here. We can see where the black line is starting to turn up. So that's the difference between the 12 and the 26-day moving average. The red line is the 9-day moving average. That's your signal line. So we did cross below that signal line on about the 6th of January. We got this pullback where we're testing support. Accumulation is actually decreasing at the moment, so we have more outflow than we do inflow, but it is doing a pretty good job of holding this resistance line or support line. The 5-day is turning down. The 50-day has rolled over and is turning down. We haven't had a 50-day do that since the 9th of May. So I might be looking at some additional lines of support here. We could look at this high from, I'll go ahead and put it on there just so we have it for posterity. I'll just draw the trend line about right there. So that might be your downside target. We're sitting at 240, so that's $20 to the downside. And it looks like about $40 to the upside. So I think your risk to reward is skewed the right way. 200-day is still increasing. They have outperformed the S&P 500 over the past year. I am looking at a 1-year chart. So they have outperformed the S&P by 10%. They are slightly outperforming the XLK, which is the technology sector, just barely. Renewable Energy Equipment Industry Group. They have outperformed and underperformed, so they're just, well, really hovering around where their peers are trading. And then this industry group is outperforming the S&P 500. So you do have a somewhat strong company and a strong industry group. So that is positive in my opinion. I don't see any real spikes in the volume except for the one sell-off day that we had on the 7th. Let's look at, I've got that saved. Let's go to a weekly view. And they are also on a sell signal on the weekly view. The RSI did come down and test the 50-day, but it's back on the rise. In the weekly view, the money flow is positive, but we are right where I would consider it neutral. So it could go above or below as far as money flows. So this one's a little bit questionable as far as the technicals, but I do think the reward is higher than the risk. You just have to keep some tight stop loss levels on it and monitor the progress on the charts.
Thanks, Daryl. All right, so let's take a look at First Solar. Okay, so the question was, do I like Nextpower over First Solar? So let's start with the valuation on First Solar. I updated it, and it's discounted by 26% overall. Now, First Solar, its market cap is higher than Nextpower. Okay, so we're dealing with the $15 billion market cap versus 26.4. But the cash flow is very similar. Okay, cash flow between the two is very similar. Well, obviously, the lower cap stock is going to look much more favorable. They have about First Solar is growing faster. That looks good. It does cash flow. And one mistake I may have made is here. Let me double check that number. Make sure no, the shares outstanding are correct. Okay, so that looks good. All right. On the earnings per share, First Solar looks much better. And it's growing faster. Man, that's a tough decision. I like them both. I'll have to think about it. It's up to you. Which one do you think is going to do better? This one is a more known commodity here. I think more investors know First Solar. So there's more confidence there. Now there's not a lot there's more meat left on the bone here. I mean, this is like a big juicy steak if these guys start to really move higher. Both stocks have been doing well. I think the big picture for that industry, solar is not going away. We need more power. And solar, I mean, my experience in getting solar installed, once we got the permits, they literally installed in a day. It was like, what? They came on site. It was like a crew of 3 guys. They were on my roof. They put the hardware down. They put the panels down. They got the system operable, and shazam, we were off to the races. 1 day installation. So it really worked out nicely. So I'm not going to give you a firm, like it's white and black answer. I like them both. I have to think about it. But I'm glad you brought up First Solar because I was looking to pick up NXT, but now I'm thinking to myself, I got to think about First Solar, then make a decision. So thanks for asking about that. Bo, how are you, sir? Can you guys look at Next Gen Energy? They have the same rise as Camcode. And we're talking energy today. So it's Next Gen Energy. What is the ticker there, Bo? Do you know what the ticker is there, Daryl?
I'm looking here next. I see a next.
Oh, I think Next Gen is put together here. Okay. So let me look at it that way.
NXT. Didn't we just look at that?
No, that was Next Power. I think it's when here, Next Gen Energy right here. Okay. Man, these energy stocks are up nicely. Yeah, NXT, you got it. We're on the same page there. And what's interesting is Ricardo is a member investor. Good to see you, Ricardo. And he sent me a Discord message about, hey, energy companies. And I guess I had on my mind utilities and oil companies. So I gave him a response, based on those industries, which are really old. But solar is very new. It's like a new thing, right? And it's really worked. I can tell you firsthand, it works. And now you see solar products left and right. Like my wife's got lights in the garden. There's that's not new, but they're really impressive. They stay on all night. I'm like, wow, those little panels crank up that power all night. That's pretty impressive. And you have a lot of I think RVers really love solar. Solar is going everywhere. So Next Gen Energy, small cap, not making money yet. That's okay. We can look through that if they're growing. If you're growing, you're in the game. Next Gen Energy, an exploration and development stage company, engages in the acquisition, exploration, evaluation, and development of uranium properties in Canada. It holds 100% interest in the Rook I project that consists of 32 contiguous mineral claims totaling an area of approximately 35,000 hectares. Do you know what a hectare is? I don't.
I'd have to look it up. I've heard the term before, but
is it like 1,000 acres or something?
Yeah, probably something like that.
Located in the southwestern Athabasca Basin of Saskatchewan. Okay, they were founded in 2011. Okay. So these guys are doing uranium. They're doing uranium mining. They're not making money yet. So they're not earning revenue yet. It's all expenses. So this is very speculative. If they are successful, it might be a big win. It might be a modest win. Might be a big loser. Not my type of investment. I'm not a mining expert. I'm not an expert on uranium. I barely know what a hectare is. I don't know what a hectare is. So this one here would be a pass for me because I just don't have financials to work with. It's really risky. Over the 1 year, the story that this stock's trading on is we're going to need uranium to power nuclear, and nuclear is making a comeback. Nuclear was, popular, I guess, in the 60s. A lot of nuclear reactors were put into service, and now they're thinking, okay, we'll make these smaller nuclear pieces or nuclear power generating installations, and we'll install them near data centers as a use case. That makes sense, but nuclear is like really expensive. It's very, as it should be. It's highly regulated because we don't want mistakes there. We don't want disasters there. Those could really be ugly. Chernobyl is horrible. We don't want that to happen again. And so that expectation that we're going to need more uranium is out there. So it's bidding up this stock. And it may end up being a real good investment. But some of these investments have gone bad. Like I remember, was it lithium was supposed to be the big thing like 5 years ago? Oh, we're going to run out of lithium. And man, those investments ended up being big losers. I didn't buy any of them, but I just observed, oh, okay, I guess we're not going to run out of lithium. Or they had there was a turn on, we're not going to use lithium anymore for batteries, for big battery packs. And they went with a different material. Same thing can happen with nuclear, which is, hey, we don't need nuclear because we have solar, we have wind, we have a lot of natural gas we don't know what to do with. So let's start burning it through turbines. Turbines are pretty flexible to install. You can put them, those are also regulated. You got to be careful with them. You're basically, when you take off on an airplane and you look at those engines on the wings, and they're pretty I flew last week, and I was on a pretty modern aircraft, and those engines are so impressive. They create so much thrust. Well, they put one of those engines, and that generates power for a data center. On airplanes, they basically burn kerosene, but those same turbines can burn natural gas. And that natural gas converts from natural gas as a commodity into electricity for that data center. And I do have experience with turbines of that type installed in factories because one of my jobs way back when was doing a full model for those turbines. So it really works. Very applicable for data centers. And if you look at some of these big data centers that are being built, that's what they're putting is these gas-powered turbines. So next gen, I can't do valuation, but let me kick it over to Daryl and see if he can look at the charts and tell us what he's seeing.
Yeah, let me pull Jim and I over here and we can learn about hectares. So it's basically a metric unit, and that's what threw Victor and myself off because Americans are challenged with the metric system. But it is basically 10,000 square meters, and maybe some of our European friends already knew that. It's 1 hectare is approximately 2.47 acres. And for anybody that's challenged with numbers, the visual aid, it's basically 1 hectare is basically 2 American football fields. So there we go.
Now you're speaking my language. If you mix in a little football in there. I totally understand what you're talking about.
Okay, so let me get this back into position here. So this one's also been traveling sideways, and looks like it's been looking for a little bit of price discovery, and then we had a little breakout on the 2nd of January. 5-day is moving upward. The 21-day EMA is moving upward. The 50-day and the 200-day. We are in overbought territory on the RSI. It's done a fantastic job of holding an RSI of 40. We're in a buy configuration on the PPO and have been since the 23rd of December. Money flow is positive. Accumulation is at a 52-week high. Take a look at the weekly view. We're also in a buy configuration, have been since the end of December, and we just moved into overbought territory today with this surge higher of 11.08%. So if you had bought it when these signals fired back here, you'd be doing pretty well at the moment.
Yep. Looks good.
Oop.
And you still there, Daryl?
Yes, I'm here.
I think your internet is slowing down at times, and like the
Yeah,
screens.
I've heard that mentioned. I don't know what to do about it right off the top of my head.
Well, I've got an earthquake over here on my side, so let's just power through. All right. Thank you, sir. Are you done there, Daryl?
Yes.
All right. Perfect. All right. So the markets have kind of cooled off a little bit. We're pretty flat across the major indexes. The Russell's still doing okay. We're still seeing that semiconductor is still leading the charge. And software's still lagging. Google is getting sold off. Meta's it's been interesting that ever since their last earnings, for in general, it's really sold off. So I think they're eager to have another earnings report and tell everybody, "Hey, we're not going to spend a bunch of money anymore."
Yeah.
But we'll see. We'll see what they say. Yeah, it's pretty mixed out there. Robinhood's down. GEV is up. Midstream players are up. Oil companies are up. All right. Okay. All right. So we've got a couple questions from Ricardo. He wants to look at SCCO. Let's take a look. And SCCO is like, it's been one of those, it's down today. So maybe I got to stop talking and start acting. But I've been following this one for a little bit of time, and I probably looked at it here, and I was afraid that, I was probably buying at a peak, and it went higher. And then I probably looked at it here, and I was afraid to buy because I thought I was buying at a peak. And look at it now. So this is a company that really focuses on copper, and we need copper. We need it for electronics. It's in a lot of products. And these guys have a lot of mines in Peru, Mexico, Argentina, Ecuador, and Chile. They also get involved in silver. So gold, I'm sure, because, they have mines. They probably have a variety of products coming onto those mines. These guys have been growing. Now, the growth, right, is pretty incredible. It's up 88%, up 170%. And the numbers percentage growth is not as incredible. It doesn't match the stock appreciation, kind of like the dramatic rise in the stock. I'm not seeing a dramatic rise in revenue, a good rise in revenue, a decent rise in revenue. These guys do cash flow. I do like they're growing their cash flow. Very good margins, very good profits. And this one here is one that I've been watching. I want to buy it. It's just, man, it's so hard to buy this darn stock because it keeps going higher. I don't want to buy it and then watch it go down. But boy, sometimes when I try to be too perfect and too cute, I miss out on an opportunity. This thing's discounted by 33%, in my opinion. So I really wanted to see the charts on this one, Daryl, if I can kick it over to you.
Okay. So the last time we looked at this 5-year daily chart. And we put this long-term support resistance line. You can see that it was tested from the lower side once more. This should be a red down arrow, by the way. It was rejected again in 2022. Broke out above it, oscillated above and below it, came down and tested it from the upper side, so it was a support line at that point. And since then, it has not looked back since November of 2023. So now we'll step in and just look at the past year. So today it's trying to trade down below its 5-day moving average. I don't see anything unusual with this candle here that would indicate to me that we have a downdraft coming. But the 20-day is still increasing. This is not a EMA, if I can tell, because I have it as a gold line. The blue line is the 50-day and the red is the 200-day. We are in overbought on the RSI. We've pretty much been in a buy configuration since the end of November. Before that, we were in a sell condition, but it definitely turned around on the 1st of December. Accumulation is driving much higher right now and getting back to near a 52-week high. Money flow is positive. I don't know how much higher this one can go. I think this is all-time highs that we're looking at pretty much. So it looks like the trend is definitely higher. I only see one 50-day test in November. If it does pull back to that 50, that looks like a buying opportunity for sure. But it's about $40 ahead of that right now.
Interesting. Thanks, Daryl. All right, so RM Laughlin, ServiceNow and Progressive. Yeah, we can look at both of those. And Progressive, we looked at it on the member call on Wednesday. So it's a little fresh in my mind too. So and I've got a nice compare with other insurance companies, including some lesser known companies that are just really flourishing. So let's get into ServiceNow and look at Progressive after that. So I'm going to leave Intuit open. It relates to ServiceNow. So ServiceNow does, where they began was they do service. And if you work at a company or belong to a big organization like a university or something, you know that we're all dependent on PCs and you have PC support and so forth. And ServiceNow began as a ticketing system for for big institutions, big companies, and it's a really good piece of software. They have a very dynamic, enthusiastic CEO, Bill McDermott. And I know Bill McDermott because he worked at the company that I currently work for, and he worked at a different company that I worked for in the past. So I'm familiar with him, and really, really good CEO. $133 billion market cap. Forward P is 33. They have good growth. Analysts think it's really discounted. Over the 1 year, it's down 39%. Early in the AI kind of story, ServiceNow said, oh, we're going to be a big player. We're going to be a big player. So their stock really rallied. But for the last year, the market's not sure what AI is going to do to software companies. So ServiceNow and their main competitor is Salesforce. They've been sold off in a big way. And when we look at ServiceNow, they are growing. And look at these numbers. They look fantastic. 22.8, 23, 22.4, 21. This shows that these guys are getting it done. More customers are buying ServiceNow. They're upgrading the number of users that they use. They're willing to take, price increases. This is a very good sign. This is a healthy business. There's no disruption happening here. Quarterly, consistent. So the top line revenue looks good. Looking at their free cash flow, this is what I like to see. Look at this growth, and a very good trajectory. I see this is the kind of data that I'm comfortable with, confident over. I expect that they're going to head toward 5 billion. It's just very logical. Very high gross margin, good profit margin, and the free cash flow margin looks terrific. So ServiceNow is a fantastic company. Their fundamentals look good. Analysts think, man, this thing is so discounted. Analysts also put out there that these guys are going to keep growing. They're not seeing an AI disruption. They're seeing that ServiceNow is just going to keep adding customers and become a $30 billion company in the future. They're also seeing that the forward PE is coming down. We're in this year here, they're FY 2026, and then next year it'll be 26. Not sure about this number. This might be a little bit of a data integrity issue, but I could see these numbers make sense. ServiceNow is very well priced. It's a good business. I don't own it because I own Salesforce, but I would not argue with anybody that likes ServiceNow as a stock. That is Snowflake, different software company. Here's ServiceNow. It's discounted, 36% discount. Software companies are discounted. Software companies are like, hey, they're just, the market's unsure. Not sure if software companies are going to be disrupted, if they're going to be helped, if they're going to be hurt. Not sure. But I'm looking at the data that's real, financials, forecasts that analysts are putting out there. All those things look good. Good balance sheet. Look how much cash they have. 5.4 billion versus only 2.4 of debt. It looks great. Looks really good. How the charts looking on ServiceNow, Daryl?
We'll go back 5 years and add a couple of auto support resistance lines. So I have this upper one at these peaks and this peak here. And then I have another one because I think it's heading lower. I have another one set at these two and the bottoms here from 2021. So this one looks like it is headed lower. We'll go to a 1 year chart now. And we can see they've been on a pretty steady price decline. I'll annotate that a little bit. So they have one downtrend line right there. They're well below that at the moment. Looks like they have been on a steady decline since about the 15th of December. The 21-day had been declining since the end of October. They did reach a high about that time. Lots of volume since this sell-off here. The volume has been, for the most part, with the exception of the 2-week holiday period, has been pretty much above the 50-day average on volume, and those are all down days. That is not a good position to be in. They are oversold at the moment. This is the most or least RSI that I've seen, except for this one. And that was even over the 5-year period. I had not seen the RSI this low before. We've been pretty much in a sell condition since the 5th of November. The RSI, with the exception of 1 or 2 days here, has not been above 50 since the end of October. Money flow is predominantly outflows, and we've been on a pretty much a decline in the accumulation distribution. We've been in distribution since the end of September. I think this one is going to back to the range that we saw earlier. I don't think it has support until it gets to about 120, and it could fall as low as 92, in my opinion.
Thanks, Daryl. So I asked Gemini, why are software stocks selling off for the past 2 years? And it pretty much reinforced what I had heard. And here it is. So AI disruption fears. A dominant narrative is that AI tools, which can automate tasks and even write code, could potentially disrupt traditional software as a service business models, rendering some applications obsolete and pressuring licensing revenue. Now, I would agree that if you have AI agents doing tasks this simple example would be, you contact one of your vendors and, hey, I need service. I need service on, a product or maybe a particular service that's provided. Well, you can chat with somebody, but maybe you can start chatting with an AI agent and get what you need. Now, if it gets that good, yeah, you can probably take some seats off the table. You can probably take some employees and repurpose them. If not, maybe as people retire, you don't replace them or lay them off, because you're a business. You have to, be as strong and ready to take on the future as possible. So I could see that. I just don't think it's happening overnight. I think it's going to take a while, similar to other AI examples that are out there. So we'll see how it goes. I'm still not seeing the disruption in ServiceNow, software, Salesforce, Adobe. I mean, I can go down the list and it's like, man, I don't think it's going to be disrupted, but time will either prove that I'm right or wrong or somewhere in between. I think it is going to change software companies for sure, because it's a new way of getting data. I mean, I've been using Gemini a lot more. I don't search as much. Like, I used to hunt and peck for data off financials from company websites. And that took maybe 5, 10, 15 minutes. And of course, it takes energy too. You got to concentrate and get there. Now I can type it in Gemini. Boom, it gets it for me. All right, cool. Time saver. So we will see how it evolves and where companies go, which ones are going to be the winners, the losers. For now, we can just theorize what's going to happen. Now, what's happening right now with the stock market, we're in the red. All right. Cancel my reservation for that nice sit-down restaurant. We are hitting the top ramen today. Got to save a few bucks. So NASDAQ's down, S&P's down, Dow Jones is down. Semiconductors hanging on to its gains. Google is under pressure. Meta's keeping its gain. Software space is still down. Palantir's down. How is that possible? CrowdStrike's down. The health plans are down. Some financials are doing well. All right. All right, let's talk about AMD. Mike, the dividend investor guy, wanted to talk about AMD, so let's take a look. I want to keep those open. Let's go here. So AMD is Advanced Micro Devices, $376 billion in market cap. Man, this is when the stock jumped in October when it was announced that they had some agreement with OpenAI. And they agreed to give a portion of their company to OpenAI. And OpenAI would then use AMD GPUs, I believe, and I'm sure CPUs for their operations, their data center operations. So these guys jumped up, but then they kind of gave up some of that gain a little bit, but now they're beginning to flourish again. This has been a winner, absolutely. Very good stock. I should say the stock price has really worked for investors. The P/E ratio was very high. It's coming down to 41. Analysts think it's a little discount left. The growth looks good for the trailing 12 months. Looking at the quarterly, looks good. Building ahead of steam. Momentum. Momentum is building. Going from single digit, 17.5, 24, 35.9, 32, 35. That's momentum right there. Looks good. All right. So the growth looks good. Gross margins of 51, not quite as good as NVIDIA, but those are decent. They are profitable, and their free cash flow has improved. In the past, that's one of the things I haven't liked about AMD is other semiconductor companies are just cash flow machines. They cash flow so well. And AMD wasn't as good, but 17% is pretty decent, pretty good. With that growth, I think it's good. So analysts, 34 of them are covering AMD. What's their forecast? So this year they're going to grow at 32, 39, 28. Wow, it's good growth. Wow, the growth looks really good. So this year was a good year. It's going to be a good year in 26, 27, 28, 29, 2030. They're going to get to be a $138 billion market cap company. So long as, the demand for semiconductors continues. Is it going to continue? I think at some point it's going to stop growing. It's just logic. We're going to have a pause. We're going to have a digestive process. Like, these companies are taking on so much technology, but not a lot of it's producing return on investment. So at some point I'm expecting there will be a pause, but for now, everything looks good for AMD. Looks terrific, in fact. And their PE ratio will drop down. So this one's looking good. Let me kick it over to you, Daryl, and I'm going to see if I've got a valuation on AMD.
So last time we looked at this one, we looked at it on a 2-year time frame and had these downtrend lines here, which it did break above the lower downtrend and shorter of the 3 lines on May the 12th and has been making steady progress cutting through these downtrend lines. It did this is when we drew this particular trend line, but it finally did break above that and has been trading above that since. We've been somewhat stagnant around the 216 price level. I see this shooting star candle here, which told me we were going to have a down day today. So I could see that from yesterday. The probability of it being down today was pretty good. The RSI is, what's that?
Can you define what a shooting star pattern is?
You can see this long, so it opened and closed almost at the same price yesterday.
Uh-huh.
And then you have this long wick that went all the way up to 237 yesterday.
Uh-huh.
And then it traded back down to 227. So
Thanks, Daryl.
looks like buyers just could not create enough momentum to hold the price up. 50 days declining. The 200-day is still increasing. It had been trading below the 50-day for quite some time. It did open above yesterday with the semiconductor buying yesterday. The RSI can't get quite above 60, hasn't been above 60 since about the 5th of November. So we're still in somewhat neutral price action. As long as it can't break out above that, then you're not going to see push for higher prices at the moment. We did get into a buy configuration on about the 22nd of December, but that's in bearish territory, so I don't give a whole lot of credence to that. So if you've held this for the last year, you've performed basically the same as just owning the S&P 500. You've underperformed technology. You've underperformed the semiconductor group, and the semiconductor group has outperformed the SPY by 72%. So despite this big price run, there were a lot better opportunities to be found somewhere, because semiconductors have really outperformed the S&P 500, while AMD has really not.
Thanks, Daryl. And I updated my valuation on AMD, and looks good. I think the company, I could probably move this to 7.5. It's discounted by 26%. The earnings per share look good. The cash flow looks good. The growth rate's very good. So things look good for AMD. And so what was your conclusion? How's the setup on AMD? Do you think the setup is good to buy, or is it, it's heading towards some type of drop?
I think we'll test 200 before we will 267.
Okay, so we might see a dip and then followed by a rally.
I'm not going to say that yet. I just expect that we have lower prices in our future.
Okay.
This one is stalling out. It took a big rise yesterday, but it's stalling out.
I like what I'm seeing from a fundamental perspective. I definitely do. The PEs are a little high, but the fundamentals look really good. AMD's in a good spot.
Let's look at it on a weekly and just see what. Yeah, it's been in a sell configuration since the 17th of November on the weekly chart. You see right here, it crossed to the negative downside. And we also crossed below 60. If it can't get back above 60, then this will probably continue happening. So my thinking is we have lower to go before we do much higher.
Looks good. Thanks for covering it. And I updated AMD on the valuation, Mike. So this should be on your terminal and you can be able to see it. I like what I'm seeing, but I do agree that, man, semiconductors just been roaring higher. And at some point, we're going to see a pullback. It just it happens, right? So even NVIDIA's had pullback. So let's see how it plays out. But if there's a strong pullback, man, I'm going to jump into AMD. Probably trade in my Qualcomm, which hasn't been performing well at all. All right, so I'm a little bit short on time. We're going to cover BPOP. And I want to keep this one open. And some of you asked for multiple stocks, and I apologize that I can't get to them all, but I've got something to tend to here and really in the next 5 minutes, but I can be a little bit late. So BPOP is Popular. Popular and its subs provides various retail and mortgage and commercial banking products and services in Puerto Rico and the United States. The British Virgin Islands. The company offers savings now, money market, and other interest-bearing demand accounts, non-interest-bearing demand deposits, certificates of deposits. Okay. And I am familiar with this title or this brand, but I've seen it in Mexico. Yep. It's for Spanish, Hispanic markets. Looks good. So $8.5 billion in market cap, revenue $2.88 million. Forward revenue looks really low, pays a dividend. Where are these guys located? So in Puerto Rico. Okay, very good. So their growth, so they are a bank. These guys are going to be doing net interest margin. So they've been growing nicely. And I hear a lot that regional banks should be doing quite well. And these guys are probably set up to take advantage of those low interest rates, probably see a lot of activity. They get to charge fees on that activity. So they're quarterly, nice, consistent growth. That looks good. We want to see that a bank is expanding their book value. And I'm going to look at book value here, and then I'm also going to look at the price to book ratio, which is in a different screen. And here's the book value. It's been increasing. It was at $53. It's up to $91. And tangible book value per share has expanded. Very good. So what's the price of the stock? This price of the stock is 128. So let's take a look at the price to book. So price to book, 1.42. That's good. It's I'm going to put these guys next to a bunch of other banks. So let me write this down. So we'll look at that. Let's also look at their forecast. So their forecast is, so they were supposed to contract this past year. I don't think that happened. And then really good growth in 26 and 27. That looks really good. Forward P of 9. So that looks good. So 9.7. Okay. And the earnings is not keeping up with the revenue growth. The profitability is not keeping up with revenue growth. But in general, the numbers look really good. I'll create a valuation. If you wouldn't mind, Daryl, taking a look at the charts for Popular.
Yeah, so the charts are actually looking pretty good at the moment. So when they started this run out of the April lows, notice that prices were moving higher. One of the things I always look for in that case is, do we have a negative divergence on RSI and the PPO? On the RSI, we did not. So with each push higher, we had higher RSI. I like to see that. So even on this third push higher, we had really good RSI. We started consolidating, and then here we started having all the discussions about interest rate cuts. And October 27th, we weren't necessarily guaranteed of a cut in December. And then as we moved into November, it became apparent that we were going to have a rate cut. So things began to do a little better. That helps banks. They did come up here and get a bit oversold. They're pulling back a little bit and making some progress once more. The 21-day is increasing, the 200's increasing, the 50-day is increasing, and all the averages are in the correct order. While the price
You there, Daryl?
is moving divergence on the PPO, but that was not confirmed by the RSI, which I tend. Go ahead.
Just your internet's really, really lagging. And I couldn't
I'm
make out
so
what you
sorry.
said. That's all right. It's not your fault. I just couldn't make
Okay.
out what you said over the last 10 seconds or so.
Okay. So one of the PPO did have somewhat of a negative divergence, but the RSI did not. And I give more weight to the RSI than I do this. On this sell-off, we did come into bearish territory, but we did get a buy signal on the 6th of November in bearish territory, but we've since moved into bullish territory. It's gotten a little weaker. Here on about the 12th of January, we moved back into a buy signal or a sell signal. The accumulation is at a 52-week high, and the money flow looks really good. If we switch over to the weekly view, we haven't quite got into overbought, so that looks good. And we are in a buy configuration on the weekly view. So this one looks good, and I don't know much about this particular bank, but I feel good about banks in general. So I presume if I went and researched this one, I'd probably feel pretty good about this one too, and the
Yeah.
current environment that we're in.
And I mentioned earlier that, I keep hearing that the regional banks should do well. And I think that's correct. The economy's looking good. I don't think we're going to have an unemployment problem. I think we're going to be fine with that. We're going to have a lower interest rate environment. That's great. So overall, I think it's looking good. So what I'm trying to do, and we'll do that together, I guess. I think it'll be interesting to kind of look at the valuation. Okay, so here's Popular, and I'm valuing the company based on its earnings per share, taking the P ratio that's average for other banks. Let me double check my growth rate there. Make sure I'm going with the good growth rate. Yeah, it's a pretty decent growth rate there. Okay. So its P ratio is looking good. Like the earnings per share should drive a good valuation. Now price to book. So the price to book target's 175. That's the average for the industry. The book value for these guys, I don't know if that's accurate. So let me update my book value per share. And we look at banks, we got to go at book value and earnings per share because free cash flow just isn't the right thing to do. $91. That's a pretty strong number. Good. Okay. Let me double check some of these numbers, make sure that it all looks correct. That looks good. So the book value is not getting me to its current stock price. So yeah, the book value doesn't get me to the stock price. Earnings per share does. So overall, I think the stock is fairly priced. It's that book value that's missing. So let me double check something. So the price to book listed on stock analysis is 1.42. So why am I missing on that? I'm going to have to do my homework there. So 142. Let me try to fix that on the fly here. Yeah, that is correct. So I just don't agree with this number. Should be different. So I'm gonna double check this, and overall, I think it looks good on earnings per share. If we believe what stock analysis is saying, the price to book fits right in here, right where the pack is. Its earnings per share looks good because it has a lower earnings per share than most other companies are out there. The PE ratio, PE ratio is lower. It's right there with US Bank. So it looks good. It's been doing well, and the forecast for the business is that it's going to do better. So I'll keep working on it. I'm going to make myself a note, and then I'll get back to you on that one as well, Ricardo. I'll email you and see when I've got it updated. All right, so I've got to run, and man, software stocks are getting killed out there. But good job today, Daryl. Thank you so much. Everybody,
Thank
thanks
you,
for tuning
Victor.
in. It's nice to be streaming again. And hopefully Daryl has time to stream with me next week. We can get back to our Monday, Wednesday, Friday routine on the mornings. And I'll stream in the afternoons. I'm also going to stream this weekend during the football games. We have 4 big football games over the weekend. And I could multitask. That way I can keep my eye on stocks, which is funner, but watching football is fun. There's a lot of downtime between plays, so I can watch some stocks too. Anything going on with your channel, Daryl, that you wanted to mention?
Let me. So I did do a live stream on, I guess it was Wednesday or Thursday. Basically giving an overall view of what I'm seeing in the market right now. That might help you do any preparation if you tend to do those kinds of things when you're anticipating some kind of market pullback. I also did an earnings preview on Citi. Turned out pretty well. And I did a review and gave my price target on Citi. So if you haven't looked at those two and you're interested in banks, you might want to take a look at those. Then I've been doing the weekly chart reviews, selecting specific charts out of my portfolio and just showing people what I'm seeing in them and any decisions that I made based off of the charts. So hopefully that can help with other people that may be looking to do that, how I actually use charts in making decisions. And you can get to my channel with this QR code here.
Excellent. Thanks, Daryl. Everybody, thanks for tuning in. Good luck today with your investments. Have a nice weekend too. Enjoy the football games over the weekend, and let's see how the stock market trades for the rest of the day. Take care, everyone. We'll see you.
Take care, everyone.